I'd just like to welcome the panelists for agreeing to be with us this afternoon. We're very interested in hearing all of what's been going on in Jamaica. Of course, I'm sure a number of people from around the Caribbean interested in the financial services sector have been following closely the various manifestations of what Jamaica has been doing, but we'd love to hear from all of you the specifics and the thought process, the philosophy behind what has been happening in terms of managing the pandemic, and where your thoughts are as far as where we are going in the next perhaps year, 18 months, or even beyond that in Jamaica and the wider Caribbean. And so without further ado, it is my pleasure to welcome our guests today. Of course, this interaction is being organized by the Caribbean Association of Banks along with the Jamaica Bankers Association. So I think it's fitting that we start with Jerome Smalling. Jerome Smalling, president of the Jamaica Bankers Association, a dedicated financial expert, CEO of JMMB Bank Jamaica Limited, and a group banking lead. He also serves as president of the JBA, as I said. Jerome holds an MBA and bachelor's degree in business and professional management from the H. Wayne Huizinga Business School, Nova Southeastern University, Florida, USA. He's also a fellow of the Institute of Canadian Bankers and completed executive training at the University of Pennsylvania's Wharton Business School. Welcome, Jerome.
Thanks, Jerry. How are you?
Not bad at all, thanks. A little bit of a wave passing over the Eastern Caribbean. Sunny skies for the time being. I understand you guys are monitoring it for Jamaica in the next week or so. It may turn into, I'm told, is it Storm Epsilon? We're getting deep into it. We're beginning to learn the Greek alphabet by force, I'm afraid.
Good reminder of our Greek alphabet.
Yes. We also have with us Dr. Jade Lewis, currently the division chief for the Financial Institution Supervisory Division at the Bank of Jamaica. He's a graduate of the University of the West Indies, from which he holds a PhD in the Economic Policy Development Program. In 2008, Dr. Lewis was accredited as a certified financial analyst and was certified as a financial risk manager in 2005. He graduated from the University of York with an MSc in Economics and Finance in 2001. Dr. Lewis began his career at the Bank of Jamaica in 2004, having served as an economist / senior economist in the Financial Stability Department and the chief economist for the Economic Information Publications Department. Welcome, Dr. Lewis.
Thank you so much. And the first name is a little tricky. It's Jide.
I thought to ask, I only thought to ask this morning. My apologies.
No
and
problem.
Thanks for the correction.
No problem. Good.
And of course, last but certainly not least, the rose amongst us three thorns, I guess. Antoinette Mccain, Chief Executive Officer of the Jamaica Deposit Insurance Corporation. And she has been CEO of the GDIC since January 2007. After a career at the Public and Private Bar in Jamaica and the British Virgin Islands. In 1996, she was employed as legal counsel at the Bank of Jamaica and thereafter joined the JDIC as legal counsel and corporate secretary from 2003 to her appointment as CEO. In a position as a CEO, she is an ex officio member of its board of directors and an ex officio member of the Statutory Financial Regulatory Committee and the Financial System Stability Committee, both established under the Bank of Jamaica Act. Welcome, Antoinette.
Thank you.
Well, guys, let's jump right into it. Of course, COVID-19. We're now 8 months into the pandemic. So, Jide, just give me an overview of what the bank. What was the immediate response by the Bank of Jamaica? We won't dwell too long on the early days, but what was the immediate response from the Bank of Jamaica and the Jamaica financial sector?
Sure. So, in the context of a crisis, which is a 1 in 100 year crisis, there's no playbook that is written that could prepare you as a supervisor, as a central bank for this occurrence. But I can certainly say heightened monitoring of the financial system, of financial markets, was a critical component, a critical response. We collaborated a lot with our sister regulators and, of course, the JDIC in weekly meetings, just trying to have discussions as to how we see markets evolving. We went through the initial period when we saw a lot of volatility in particularly the equity markets and the bond markets. And so in response to that, the central bank determined that it would pump liquidity into the banking system to ensure that as regular citizens went to their deposit-taking institutions, there would be no doubt that banks were open for business, that they had and that they could access their deposits, and that they could do regular banking transactions. So I would say the first couple of months, we have seen it sort of transition from a market instability to more looking at issues such as credit risk, especially in the context of the deterioration in employment that we have seen over the last couple of months, particularly in the hotel sector, transport, communication, and to to a lesser extent, but significant manufacturing and distribution. So our response: heightened monitoring, provision of liquidity, intervening in the foreign exchange market where we saw that as being necessary, especially since one of the major flows of liquidity into the foreign exchange market, being the tourism sector, has been stalled for the last couple of months. We have ensured that we provide the necessary foreign currency in that market to give confidence. This is the name of the game, is confidence at this point.
Good. And I think you have done so, and I'm sure Jerome will confirm that he's pleased with what he's been seeing from the BOJ. Jerome, a basket of protocols, as you know, protocol being now the name of the game, a basket of protocols being put in place by the JBA. Just walk me through some of what has been put in place and what has now become the norm for the banking sector in Jamaica. I think you may be on mute, Jerome.
I'm sorry. Thanks, Terry.
Go
on. Just to put in context, so our first case in Jamaica would have been reported around mid-March. And so as at the end of March 2020, the banking sector had outstanding loans of 81 billion Jamaican dollars and deposits of about 1.14 trillion. And total capital at risk stood at $229 billion, based on the numbers published by the central bank. In terms of, so there's a wide distribution of these loans across multiple sectors, with the biggest portion being held in distribution, tourism, and the rapidly growing construction sector. What our immediate response to the pandemic and the projected economic fallout in the banking sector is that we came together and we decided to devise plans to support the Jamaican public through the expected challenging times. A number of initiatives were proposed, and the central bank provided oversight, as indicated by Jide earlier, and was also forthright in guiding the industry on the applications of the various measures considered. So an important stance by the JBA at the time and the banking sector was to display a certain level of resolve and not to repeat the errors of the late 2000s. So during the last financial crisis, as you would have known, the pendulum swung to the extent that the market was stifled of liquidity and support as the banks, sought to ring fence their stability. And so we agree.
And that sort of, sorry to interrupt, Jerome, that brings directly into play the GDIC and the concept. One of the things that we've seen a lot of banks doing across the Caribbean, bankers associations and banks doing across the Caribbean, is that they have gone into some degree of extension of moratoriums. How widespread was that in Jamaica?
So as it relates to Jamaica, we took a number of measures. So we offered moratorium on loans, and we decided basically against a broad brushing of the approach. We decided that we would deal with clients individually to determine what would be best suited for them. So we had a combination of moratorium, and we had also cash flow support for loan servicing, as well as providing liquidity for businesses through this. We anticipate, or we estimate, that would have provided some sort of relief up to 30% of the market.
Okay,
and just to put that into context, Terry, the central bank has been collecting information of these payment holidays, and at the height of that, which was around June of this year, it amounted to somewhere in the region of 10% of GDP. So the sort of relief that has come from the banking sector has been, I would say, extraordinary. 10% of GDP is nothing to sneeze at, and it has been fairly evenly distributed between households, what you like to call Main Street, and as well businesses, and a wide range of businesses, large, small, medium-sized businesses as well. So roughly, if you think about it, 5% of GDP to households and 5% of GDP to businesses of various types and across several sectors, because this was a crisis that affected, across the board, everyone, some more than others. But the fact is that everybody was impacted coming out of the stay-at-home restrictions that the government would have imposed over the last couple of months. So I just want to underscore and probably take this opportunity to really, tip my hat to the banks, because I think in this crisis they have operated and responded with alacrity but with prudence as well. So as Jerome said, it wasn't just a broad brush. They looked at the credits and came to determinations as to what was best.
Now, Antoinette, deposit insurance, obviously a crucial concept in these times, being able to protect the deposits of households and micro and small businesses. How receptive has the Jamaican public been to the work that is being done by the GDIC, by BOG, and by the banking fraternity on the whole?
Yes. First, I'd just like to endorse what Jide, Dr. Lewis, and Mr. Smalling have said. And, it's early days yet in the pandemic. It may be early days. We don't know the length of it. But to date, I would say both the regulators and the banking system have really, just as they've said, worked really hard together to ensure that our chances of weathering this pandemic are really good. And so far, I think they have been successful up to this point. So in terms of deposit insurance, that augurs well for us, because JDIC is required to make good on its promise of protecting depositors if their bank fails. And where the regulation is strong and the cooperation of the banking system is adequate, that augurs well for JDIC. So I have to refer to what the regulators are doing as well, because since global financial crisis it's gone. Duncan, it's gone. Oh, I'm sorry. There was a technical problem there.
You're still there.
I apologize. Since the global financial crisis of 2008 to 2010, the standard setters, in particular the Financial Stability Board, has been working with national financial safety net authorities,
right,
sure that some of the characteristics of the global financial system and domestic financial systems, where financial institutions were so large and intertwined and global, giving that efficiency to the global financial crisis and then the consequent economic fallout all over the world. There has been a greater focus that the financial safety net authorities, which you know are the regulator, that's the Bank of Jamaica. We also have another regulator, the Financial Services Commission, the lender of last resort function from the Bank of Jamaica. And also now our Bank of Jamaica has a financial stability function enshrined in law as well. So that's an important function at this point. And the deposit insurer, that financial system safety net, works together to ensure financial system stability. So JDIC, we have been meeting with the Bank of Jamaica to ensure that we are up to date on the information on the status of the financial institutions. So we're well aware of the condition of financial institutions right now. And we've also been working to ensure that just in the event there is in fact a fallout in relation to one financial institution or one or two smaller financial institutions, we're ready to pay out depositors. We are part of the National Financial Inclusion Council, the JIC, as well as the BOJ, the Bank of Jamaica, and the Financial Services Commission. There is a National Financial Inclusion Council that was established in 2017, and we have a National Financial Inclusion Strategy that was articulated in 2018, and financial resilience is part of that, the strategy, and financial capability and consumer protection. So with the work in train for all of that, we believe that that has also helped to strengthen the financial system for depositors and other financial services consumers. And JDIC has heightened its financial literacy program, which has been a key program for the Jamaica Deposit Insurance Corporation over its many years, consistent with international best practices. So we have been doing a lot more public education through various media, we're doing much more on social media, through the social media platforms, because we know that's where that's where we meet the public mostly nowadays. So we have been heightening our public education programs and financial education. We've been doing that with the Bank of Jamaica and the Financial Services Commission, the Consumer Affairs Commission, the Jamaica Stock Exchange. So we know it requires a holistic approach to ensure that we capture the whole financial markets into the education process. So we've been doing a lot of that as well. Now, fortuitously as well, our deposit insurance coverage limit was increased. It was doubled from $600,000 per depositor per institution to $1,200,000 per depositor per institution. Now, it wasn't increased because of the pandemic. This was afoot for a while. In other words, there's a lot of research that we've done. It just so happened to be increased at about the same time as the pandemic. I believe that has also served to increase consumer protection, the depositors, consumers of financial services. What we've also noted from the pandemic is that there is even if it has not done so yet, it is going to cause an acceleration towards fintech. It also means, therefore, that digital stored value products are going to become more widespread, either through the mobile technology or just through ordinary digital channels that we're more familiar with now, like the internet banking and mobile banking. So what we recognize is that we also, as a deposit insurance agency, have to make decisions on how we cover stored value products to ensure that we continue to serve the public purpose of protecting depositors and financial system stability. So we, through our International Association of Deposit Insurers, have been working on the types of models that can be used to protect stored value products. And right now, we believe that the model that is considered a pass-through model to deposits and through even the stored value platforms is the model that we should adopt. So we are looking very closely at the types of products that financial depositors, deposit-taking institutions are providing, and we believe that this pandemic is both an opportunity for the banks to move more aggressively to the digital platforms for their clients, and even for fintech firms to become a part of the financial system. And hence we will also have to know how to regulate those non-banks that offer these fintech products, including through the banks themselves. And some banks are also offering the fintech products. So it's an opportunity for greater financial inclusion. And it's an opportunity for regulators, us, part of the financial system safety net, also to move ahead with the types of regulation and consumer protection that will engender financial stability as we move faster and faster with fintech products and with digitization for the consumer of financial services. So it's a bit of a out of the bad comes good. We just, the regulators just have to as well move faster. Yep. So that's how the deposit insurer, as part of the financial system safety net, has been looking at the pandemic, you know, both what its implications and potentially what are the opportunities.
So as Jade said already, the confidence is the name of the game, and I get the sense that certainly there has been that sense of confidence, as I alluded to before. Jade, what I would like to ask, and I said, like I said, I don't necessarily want to dwell too much on the early reaction per se, but how much of what Jamaica has been able to do was sort of based on a foundation that was set in years past? How much of it, you know, was Jamaica prepared for the as much as you can?
I think that's a very good question. I think we were better prepared than we would have been 10 years ago, because we have done a lot of reforms, structural reforms, coming out of our recent engagement with the IMF 2010, 2013. And I think coming out of that, what we ended up with in a nutshell was going into this crisis with non-performing loans being very low. Non-performing loans in the banking system was around 2.3%, and around, you know, dollar value that was about $20 billion. Compared to our portfolio, which is 970 odd billion, you know, in terms of quantum. So very low NPLs. Capital adequacy was also quite, all the banks had significant capital buffers, and that is a major facet or feature of their capacity to absorb losses. Our monetary policy was already in a sort of a easing phase where we were reducing our signal rate for several years. So I think we went into this pandemic, you know, in sort of a good shape. Our reserves, gross reserves were well above 2 billion and approximating $3 billion US. So we went in with a little bit, you know, some store in the armory, as you would put it. And I think that has put us in a position to absorb some of the shocks. Though this is obviously there are lots of casualties on the you know, health-wise. our infection rates and so on, people are not well, people are dying. So I don't want to oversell the outcome. And of course, we don't have a fix on what the unemployment rates are at the moment, but they were at around 6.5%, some of the lowest in history. So, so we expect a deterioration in that, but you're deteriorating from a historical low is a better position, all things being equal, as economists would say, than when you're deteriorating from an unemployment rate of 15 or 20%. So that's what I'd have to say about that. We went in to this crisis with some amount of buffers, both on the macro side and as well on the side of the actual entity institutional level.
Now, Jerome, from the standpoint of the banking sector, we've seen a number of measures being taken. You mentioned, of course, moratoriums, which a number of people across the Caribbean have engaged. What has been the level of partnership, the level of engagement with central government and with the Bank of Jamaica in terms of how you maintain the viability and certainly the profitability of the sector in partnership with the institutions such as the BOJ and JDIC?
Well, as it relates to the central bank, they would have made an early move, as Jide had indicated. We would have received a reduction in our reserve requirements, thereby facilitating more liquidity in the market for us to provide the relief to the client base. We've been having interactions with the central bank as well around our stress testing protocols in an effort to determine what are those possible outcomes, ranging from very aggressive stress testing with the most dire potential considerations to more optimistic outlooks. The central bank would have supported us, as well as all banks would have done their own stress testing. We would have consulted with our external auditors around the application of IFRS 9 and the provisioning protocols, given the forward-looking impact of the pandemic. So to support Jide's point, and in response to your question, we've been working together to ensure that at the end of this period, if there is an end, or going forward, we're able to maintain a very healthy financial sector in Jamaica, which is key to our survival. It is the strength and the health of our financial sector is a key indicator of how well the country is doing. It impacts as well our ability as individual institutions to access credit from international institutions, both access as well as the rates at which we will access them. So we've been working with the central bank. We've been going through a collaborative effort around ensuring that the Jamaican financial sector remains viable. Jide indicated that the capital adequacy position was great. We were at 13.55% as at the end of March, as against a prudential benchmark of 10% as an industry. And our non-performing loan was about 2.42%. Which we considered pretty healthy going into the pandemic. And the 669 million in capital being held on the balance sheets of banks, I believe, would also put us in a good position to weather the storm.
One of the aspects that Antoinette raised a little while ago, and that's is absolutely pertinent in these times. And it's something that, in fact, the JBA has taken into consideration in their various protocols. You spoke a little bit about utilizing digital and electronic channels, banking online or via telephone, through call centers, using ATMs more, debit cards and credit cards to minimize the handling of cash. How readily have the Jamaican public and certainly the Jamaican banking industry taken to being doing more online and doing more in terms of using the technology?
So it has been an effort that started long before the onset of COVID-19, whereby financial institutions were actively encouraging clients to migrate transactions to what we refer to as alternate channels. The COVID-19 would have driven that the rate of adoption by the public. More individuals are using the alternate channels. However, we still have some amount of traffic, which is, it is compounded by the fact that we have to observe those protocols, which means that lines appear to be longer because people have to be 6 feet apart. Lines are ending up outside of the banking hall. When we pass financial institutions, we're seeing the lines on the roadside, on the sidewalk, and it gives the impression that service is slower. However, based on our checks, we believe that we are around about the same or at better pace than we were prior to COVID. The adoption rate has been good. We continue to offer other services online. Banks have moved towards even online opening of accounts, online financial advice, online application for loans in an effort to prevent clients from having to come into the banking hall. We have supported all the protocols related to, and all the protocols that would have been announced by the government and the Ministry of Health in particular around how to operate, how do we facilitate clients in the banking hall, what are the facilities that we would make available for our clients, both at the banking hall, at the ATMs, and all our touch points.
Yeah. And that's something that I've been very interested in, and that we do intend to do some specific research on at the Caribbean Association of Banks as far as adoption of online banking and mobile banking, in particular over the last year. But in recent years, it's something that that I know has been growing globally. But the Caribbean, of course, a little bit behind, principally due to the rate of adoption of internet technology and the fact that the penetration is not necessarily as high in the Caribbean as we would like overall. Looking forward, Antoinette, I'll put this one to you. Looking forward.
Sorry, before you jump to the forward, I noticed one of the queries in the chat room had to do with the, whether we tightened or loosened monetary policy. Just to respond to that before we move on.
Sure.
Because I don't want the conversation to be going back and forth. Just to confirm that we did reduce cash reserves, both in foreign currency, which released about US 70 million into the market, and in J dollars, which released about 40 billion into the market. So that was consistent with our stance to facilitate the provision of liquidity in the market, so that, as persons may have become concerned about the availability of cash, we certainly ensured. So in total, when you look at the injection in terms of US dollar liquidity into the market, for those who are interested in the numbers, it was about 800 million US dollars. And in terms of J dollars, it was around 676 billion. So between March and September of this year, that's the kind of quantum of liquidity. And just as a sort of a benchmark, 1% of GDP is about 120 million US dollars. So it's multiple times GDP that has been pushed into the market.
All right, thanks a lot for that answer. And that's actually something that CARICOM covered in their recent recent conversation with the Caribbean Tourism Organization, Caribbean Association of Banks, and the Chambers of Commerce across the region. I think that would have been sometime in either early September or late August. But Antoinette, I was coming to you for a moment. Looking forward, what do you see as being the state of play as far as Jamaica is concerned, and the wider Caribbean perhaps, but certainly Jamaica, in terms of a substantial recovery from the COVID-19, and I'm speaking obviously of an economic recovery from the effects of the COVID-19 pandemic?
Terry, I think that question is probably best by the central bank, which is Jide. But
I will be putting it to him as well. Perhaps I'm
Yes,
giving him
yes, yes.
a little bit of a break to think.
Okay,
Although I'm
okay.
sure it's something that he would have been thinking of quite a bit.
No, absolutely. Well, from my perspective and experience, as has been pointed out, Jamaica went into this pandemic in not too bad a shape. You know, we went into it not too bad a shape. Seeking to improve growth. I think the importance of what will happen in the future in terms of the economy is going to depend a lot on the stability of the financial system, the ability of businesses to get back some steam. And I think the regulatory system for the financial institutions and the behaviors of the banks in terms of the moratorium. I think it was a moratorium was about a quarter of the loans, the values of the moratorium. So that was quite significant. And that is the kind of those aspects, the regulation and the behaviors of the banks will help to build the confidence that I believe will take the economy forward. The timing of it is difficult to say, but I believe that at least within a medium term, and I always start medium term at 3 years, I think we should see, if all things are equal as they are now, and the pandemic runs its course in terms of how we handle it. I don't know when it's going to, but how we manage it. I believe that in the next 3 years, we should at least be back going towards growth once there is confidence in the financial system and the ability of the businesses to grow again.
Okay, and as I said, Jide, I will throw this to you as well. Where do you see what do you see as being the key prospects for energizing that growth? I know a lot of discussion has been had, and we've had discussion here at CAB and certainly in the Eastern Caribbean with the recent launch of the Eastern Caribbean Partial Guarantee Corporation. We've had that conversation specifically about the micro and small enterprise sector, and I know that that's something that has been boosted a little bit recently in Jamaica. Do you see that as being the key sector? What are the principal factors that are going to guide Caribbean and Jamaican economic recovery in the next 3 years or so?
Okay, well, let me start in the near term. So the sectors that we're seeing being most significantly impacted by the crisis, that's going to cause our GDP to decline in the range of 7 to 10%, is the hotels and restaurants. And when you talk about hotels and restaurants, it's not just it's the whole ecosystem around that. So the food channels, the persons that courier the tourists from one location to another, the attractions, and so on. Transportation and storage is also taking a significant hit, as well as the electricity and water, to the extent that persons are having to particularly manufacturing may have been slowing down. Therefore, the need for energy, from the business side of things, which are the heavy users of that commodity, would be hit. What we're hoping, all things being equal, and as Antoinette would have mentioned, it has a lot to do with how we manage this interim, this period, these early days. What we're hoping is that there will be some recovery in terms of economic growth in the fiscal year 21-22, so from March next year, we begin to see some green shoots. But as Antoinette is absolutely correct, we won't see a recovery to GDP levels that existed before COVID, perhaps for another 3 years. What's going to make the difference is, I think, what Antoinette mentioned in terms of the financial sector. I think one of the things we're looking at very carefully at the central bank is loan growth, and to the extent that we have observed. I don't know if someone can mute their mic. I'm getting some feedback. Okay, so yeah, to the extent that we can get, we can ensure that credit is continued to be channeled to the productive sector of the economy. I think that's going to be the linchpin, because if businesses cannot keep their front doors open, it doesn't matter what happens with a vaccine or a pandemic. The fact is that that entity enters into Chapter 11 and they're no longer in a position to contribute to value added. So we have been looking so far, we're pretty pleased with what we see. Loans to businesses continues to grow. Our understanding is that banks are continuing to provide, at the very least, working capital to viable credits. And what we've seen kind of slow down a little bit is consumer lending. And that for us is understandable, because if for example, there's a lot of discretionary spending, let us say on motor vehicles or a new TV or so, that persons are postponing. So to the extent that they're postponing those types of expenses, and therefore the loan growth is lower, it's not a concern, so much of a concern for us. In fact, there's a boon, because since most of these are imported, we get a little break in terms of our balance of payments. So I think the financial sector, to summarize, is a critical linchpin, and their provision of credit, particularly to micro, small, medium-sized enterprises, is going to be critical. But I think we have to also remember that the economy is extremely impacted by the viability of our large companies. So if our large companies also go under, it's going to take, let us say, of a factor of 1,000 small or medium-sized enterprises to produce the equivalent value added in terms of output. So the central bank is not cherry picking, as it were. You know, we're looking to see, as long as it's a viable business, that it continues to be able to keep its doors open throughout the course of this pandemic. That's the aspirational goal of the central bank.
Jerome, are you starting to see some of that that level of confidence being restored amongst the business community, amongst amongst your small and medium business sector, just starting to come into to the banking sector and talking about being able to just begin revitalizing the economy, beginning to get back to business, even in the new normal?
Sure, but let me step back a little to address a few of the things that Jide would have outlined. He spoke from the position of the central bank. I'm not sure how he's ensuring that businesses stay open. It's actually based on the financial sector, the banking sector, and their decision around their individual risk tolerance.
Mm-hmm.
And
yeah, but it was viable businesses. So that was an important adjective. So it's viable businesses stay open. Just to say that.
Right, but the extent to which the business stays open or the support is provided is going to be, because the central bank, and although Jide has oversight, he does not necessarily dictate to us who we should bank or how we should treat individual clients. So, so the thing is, as I would have indicated earlier, we came together as a banking sector and we vowed not to repeat what occurred towards the late 2000s, wherein banks became very strict on credit. I acknowledge Earl Gill's question around whether or not banks have tightened lending criteria. And the thing is, we have decided that where there are viable options, we are going to continue to support. In fact, all banks have recorded growth in their loan portfolios over the first quarter after the onset of COVID. So we continue to provide liquidity to the market, because at the end of the day, however we come out, we need companies to be viable. We need companies and individuals to be available for us to bank. So we do not believe in stifling the market of credit. We continue to be prudent. We continue to be selective. But most importantly, our existing book of business, we are working with those clients to ensure that they have the best possible landing. Because you're talking about potentially a significant portion of the bankable public of Jamaica who is now sitting in our portfolio. We had to ensure that we're protecting these individuals. The Bank of Jamaica would have reinforced our protocols around the handling of these accounts to ensure that these clients do not experience a reduction in their credit rating or any adverse impact on their ability to survive. I mean, whatever the future looks like. So as a sector, we have that resolve and we're providing the support accordingly.
Are you happy with where Jamaica sits as far as the level of banking in terms of, I see the level of banking, the volume of Jamaicans who are and have access to banking?
Well, it's an ongoing discussion. We speak a lot, and leading up to COVID, the primary topic dominating our space would have been financial inclusion. A lot of that work continues to occur. A big part of that would have come out of the central bank with the advancing of their fintech initiatives. They have put in place a sandbox facility to encourage banks to get more involved with fintech and to provide us with a quick window to approval, a quick window to testing, to the extent that we can offer services across a wider cross-section of Jamaicans. Challenge being, it's very expensive to open additional branches and branches in low traffic areas. And we believe that fintech is the solution to greater availability of financial services to the Jamaican public.
And doubling back to the point made by Antoinette that the deposit insurance had been increased substantially, and that it happened to be the upgrade, I think was the slogan, been upgraded, that the upgrade happened to be kind of coincidental. Jerome, how well received was that by the banking sector and certainly by your clients?
Well, I'm not sure if Antoinette highlighted the fact that, well, the structure of the JDIC is that the premium is actually paid by banks. And so the first reaction when we heard of the increase in coverage would have been whether or not there would be an increase in premiums, because it's a significant part of our cost of operation. So we believe each client is insulated in a number of ways. One is the capital adequacy requirements, which puts us in a position to, in the event of a fallout, to provide relief or to repay a certain number of clients. There's also the reserve requirements put in place. And in addition to that, there is the insurance of balances. And so we were happy to hear of the increase, and we were even happier when we discovered that there would be no increase in premiums to be charged to the banks. And so we applaud the JDIC. They had a learning session earlier this month or late last month that we presented and gave our congratulations on the efforts to ensure that the Jamaican depositors are further protected from unforeseen events.
And just to jump in, Terry, in relation to the whole matter of facilitating, digital transmission of services as well. Recently, and we would have shared this with the banks themselves. The law has been changed to, that is the Proceeds of Crime Act. Right. Have been changed to allow for stratified due diligence. So that basically the law now recognizes that banks can require different sets of information for different classes of customers depending on their AML risk profile. And I think that has come at as well. Similarly, it wasn't timed for COVID, but it has come at a fortuitous time, because it has, as far as from a policy perspective or from a framework perspective, allows legally for DTIs to structure themselves in such a way to make the onboarding of low-risk customers simpler. And we are certainly working with the JBA and other stakeholders to ensure that that is rolled out in a way to support the financial inclusion objectives of the country.
And of course, that's without having to forego the standard KYC AML checks.
Yeah, well, those have to be applied. Those would have to be applied in the case of, let us say, above average or high risk. So the law still, emphasizes that in the case where the bank determines that a customer is above average or high risk, let us say a gas station that is a cash intensive business, that they would have to use enhanced due diligence. And so that's a very good clarification, Terry. So it's really towards the persons who are parts of companies that are salaried. The bank has perfect visibility of the source of that income. They can identify the customer because they also bank the employee as well as the employer. And so, the end-to-end business relationship can be defined fairly simply as being low risk.
All right, so thanks for that. Do you want to jump in, Jerome, on that?
Right. One of the things that a lot of individuals, including based on what I've heard Jide saying, but certainly certain entities have forgotten that one of the chief organizations that would have agitated for a change in the Proceeds of Crime Act would have been the Jamaica Bankers Association. So a large part of what or the amendments that occurred in the Proceeds of Crime Act came from the feedback and the recommendation of the banks themselves. I'm not sure it's widely known to the extent that there are certain pockets who believe that banks need to be convinced that we should embrace the new POCA. The fact is that we were the ones who suggested that the original POCA was too prescriptive and that we were excluding clients who we could have facilitated in a better environment.
Okay, thanks for that clarification. Antoinette, one of and obviously we are preoccupied, being the Caribbean Association of Banks, so we're preoccupied with banks and banking. However, in terms of financial inclusion, there are a number of partners, BOJ, obviously, the Financial Services Commission, JSC, Consumer Affairs, the Development Bank playing a major role, and I've seen a lot from the Development Bank in recent months, I would say, probably the last 2 or 3 months. I've seen a lot from the Development Bank on social media and in the media. But another crucial partner is the credit union movement. What role have they been playing as far as recovery is concerned?
Yes, the credit unions are at this point subject to self-regulation, but from about 1999, they have been subject to being special financial institutions under the Bank of Jamaica Act. So the Bank of Jamaica has been working with the credit union sector in Jamaica to strengthen that sector, with a view to making sure that as we look at the banking sector all the time, the prudential regulation there, credit unions were enhancing their business models and operating as very similarly to banks. So over the same amount of years, JDIC has been working with the credit union sector to both understand their operation, understand their models, understand their risk, and also to understand the profile of the deposits they hold. So the Credit Union League has been a part of the JDIC's financial education and awareness programs over the years. So the league and credit unions have been part of this entire process that we've been speaking about for financial institutions. In fact, Dr. Lewis will tell you as well that the Bank of Jamaica has offered, made available liquidity facility to union sector as well, because they are considered very fundamental as well to our financial system stability. So we work with them in public education as well.
Okay, so we've just launched a poll asking attendees, how satisfied are you that Jamaica and the Caribbean are managing their economies as best as possible in the face of the pandemic? And we've seen very uneven application across the Caribbean. I mean, by and large, as a region, we've managed the pandemic reasonably well, I think, but we've seen very uneven application and very uneven outcomes from different pockets of the Caribbean. Some of us have been heavily affected, some of us have not. Some of us, of course, and I think the most Caribbean territory is very, very tourism dependent, as I think Jide said from the outset. And that has certainly affected the banking sector. That has a knock-on effect, not only on the banking sector, but on every sector, but certainly very heavily so on the banking sector. So just as we get ready to close out this afternoon, what do you see as being the key things that we need to do as a region to try to get back to a degree of prosperity? And I'll start with you, Antoinette, again. What do you see as being the key things, the key interventions that we need to make in the banking sector? Are we doing the right things in the banking sector to try to climb back to normalcy and eventually prosperity?
Sorry, apologize, yes. I think financial stability is key to economic stability. So even though this is the sector I'm in, regulation of the financial system, I don't want it to be thought that it is only that reason that I'm saying that. The fact of the matter is a global financial crisis showed us that once financial stability goes, so does your economy. So financial stability for the Caribbean region is very important. I'd just like to add in that respect as well, CARICOM has a draft model law for deposit insurance, still in draft. Mm-hmm. It's part of an attempt to harmonize the protections that deposit insurance gives throughout the gives a country, and it's important for the region as well to be able to foster financial stability among the CARICOM countries. I think the important takeaway is financial stability for economic stability. Of course, there are other aspects that relate to trade, movement of labor and capital as well, which I have absolutely no competence to talk about. But I believe financial stability for the region is key.
Okay, Jerome, sorry, not Jerome, Jide, what are the key steps that the banking sector needs to take for us to move beyond the pandemic and move back to a stage of legitimate recovery?
All right, so thank you for that question. I think Jerome touched on it earlier when he said that banks are really just a reflection of the health of the general economy. So I think the critical thing is for banks to help their customers to make the adjustments that they need to make in their business models, if they're businesses, or in their saving and investment habits, if they're customers, households. I think using or leveraging digital technology. That's how I would summarize it, because in a sense, I think we're all beginning to get the feeling that life will not go back to normal after this pandemic. So either we're going to adjust and become more resilient, or we're going to crumble under the weight of this massive change that has been brought upon us. What would that look like? That means that bankers need to be helping their customers to think through how their businesses may need to change. and how they can leverage technology. So maybe it's a restaurant, but they weren't contemplating doing deliveries. And the banker can sit down and say, your cash flow is coming, drying up. Have you thought about this, or pointing them to entities that can help them along that journey? I mean, we have institutions in Jamaica that specialize in that. You have the DBJ that specializes in those sorts of things. We have there are associations that are there for small businesses, for medium-sized businesses, and so on. I think we have to all kind of huddle, forget what we knew to be true 2 years ago, and think about how we can support each other in trying to figure out what business model is really going to be viable 3 years from now, rather than thinking about what we had built over the last 5 years. I think that's how I would summarize it. I endorse everything that Antoinette has said from the supervisory side, but the supervisory side is going to ensure that we can manage the crisis, but it's not going to help us to grow.
Okay, just really quickly, a question from Earl Gill. What financial reporting is required to be submitted to the central bank from the credit unions? What are their delinquency levels? And have they been undertaking stress tests? Already 3 questions, but really quickly, Jide, in 30 seconds, can you just give us a quick overview?
All right.
I know it's not much time.
No problem. That's what being at the bank needs. So in terms of delinquency levels, they have been trending up, but they have been also being managed very well, because the credit unions also provided payment accommodations, and the same guidance that the central bank provided to the commercial banks is the same guidance that we provided to the credit unions in terms of being able to disperse, to facilitate payment holidays. In terms of the heightened information, it's just information around their liquidity, information around their capital, information around provisioning levels, because those are the 3 key variables that we're looking at. How is capital evolving at the entity? How are your provisioning being implemented in the context of what you're seeing in terms of credit risk? And do you have enough liquidity available to meet the demands of your members? And did they have to do stress tests? No, we did not require the credit unions to do stress tests, primarily because their business models are fairly straightforward. They're 70 to 80% of their asset side is just loans. So we know what the risk is. It's credit risk. So it's all about how they manage that credit risk over the next couple of months. Thank you.
Thanks for that intervention. Jerome, over to you. Do you see the banking sector, the Jamaican and the Caribbean, more broadly speaking, the Caribbean banking sector doing what needs to be done to accelerate recovery?
So in investigating that question, we had to look at what is at stake. Now, as I would have indicated before, the clients who are sitting on our books, those are clients that would want to bank for the foreseeable future. The banking sector can't survive if there's a significant fallout in the number of clients available. What that would potentially trigger is a number of mergers and a number of activities within the sector. So we need to ensure that the number of clients and the viability of these clients are protected. And so we're doing it on a client by client basis, where we're speaking to our clients, we're trying to determine what are you experiencing. We're looking at the businesses to determine in particular what are the prospects for survival, what would be required for restarting. We're having those same conversations with our individual clients in an effort to try to determine whether or not these clients will be able to come back on board. We've looked at how we will restructure our loans to give relief. To Jide's point, forget what we knew before, forget that we potentially gave mortgages that would take you up to age 60. Do we need to relook at that? Do we need to put clients in a position to be able to have payments that they can actually manage in a changed environment? So we look at that on one side, and then as it relates to our viability so as it is now, when we give a moratorium where we have we consider that foregone cash flows. So the principal payment should be coming back as liquidity for us to grow our loan portfolio. And the interest payment should be coming in to represent the receipt of cash from our profitability. So once we have given up moratorium, whether it's 3, 6, 12 months, we have given up the cash flow. So the extent to which these clients will restart payment is a concern, because what it means, we're actually journalizing the interest on those loans as profit. So come the end of this period, come decision time around individual facilities, we will have a huge decision to make. Now, we are putting ourselves in a position to ensure that, one, for the first part, as I indicated, we're supporting our clients through this. And two, we're being prudent in terms of how we're managing our existing liquidity, how we're managing our risk position, and how we're taking or provisioning to put us in a position to ensure that the financial institution survive while we're supporting the client base through this period.
Thanks for that, Jerome. Great observations. Just looking at the poll, we've had 27 of 40, 67% of our attendees today have voted. And the question was, how satisfied are you that Jamaica and the Caribbean are managing their economies as best as possible in the face of the pandemic? 18 of you, 67% of respondents say that they are somewhat satisfied. Nobody, I suppose that's a good thing, nobody said that they are very dissatisfied with how Jamaica and the Caribbean have managed their economies in the face of the pandemic. Voting will remain open throughout the remainder of the session. Coming back to you though, Jerome, I need to ask, will banking ever revert to what it was pre-pandemic? Has banking fundamentally changed? I mean, we talk about fintech, we talk about capital levels, credit levels, the way in which banks are now using social media more so than ever, the way bank clients are now using different tools than they might have done, even though that might have been on the upswing. It's been accelerated during the course of the pandemic. Are we ever getting back to what banking was, coming in the banking hall and doing your business, say 12 months ago?
Well, let me consult my crystal ball. The thing is, I believe we're a part of life. The banking sector is just a part of what life is about. And we doubt that life will be the same for the foreseeable future. I mean, if we track history, we realize that whenever you have an intervention such as a pandemic or a world war, it takes, things change. And the survival of any industry is going to be around the rate at which you adapt to what the new normal is or the new future. And I believe the banks are proactively looking at what the future should be like. How do we need to change? How do we need to change in terms of our asset outlay? How do we invest? And it is absolutely necessary for survival. As it relates to the general population, we believe as bankers that we have to help them to change. We have to help them to move to that other reality wherein things are different. We do not know if tourism, which is a big earner for Jamaica, will ever be the same. If millions of people will leave their homes and fly to Jamaica to have a good time. We do not know what manufacturing or any of our industry will look like in the future. What we do know, though, is that it will be different to what it is today, and the extent to which we are able to identify the changes required for us to survive and to strive is going to determine how successful we are.
Thanks much for that, Jide. Similar question. We are, of course, fundamentally changing the way we do business across the Caribbean and across the world. Are some of these changes, and I think we've kind of touched on that before in the conversation, are some of these changes just long overdue changes that are being forced upon us right now?
Well, I don't know if they're long overdue because everything is, relative. Persons have to make choices. We live in democracies and people choose what their preferred mode of operation is. But I think what this crisis has done is it's caused us to question things that we take for granted. For example, in most Caribbean countries, we, through a lot of effort, ferret significant portions of our population from one parish to another parish so that they can go to work. And we ferret the young ones that are in our households from one location to another location so they can be educated. I think this crisis is showing us that we have to rethink what we consider to be normal. Right now I'm working from home. I think I'm working twice as hard as I was working last year, September. But my kids are also learning from home. So I'm the traffic, the commute that I took for granted, the 2 hour, 3 hour commute, especially in the height of traffic that I took for granted, has disappeared. It means that I have 3 more hours to apply to other things, work and or leisure. So I think there's an opportunity for us to rethink. I think the banks are a part of that, but I think the dialogue has to be with the various stakeholders in society, at the policy level as well, to rethink what we need to do to be productive. And if we can learn from these lessons and really question, I think we should question everything. Why do you have to transport 10, 20,000 students from different parishes to one location? Why are we doing that? Why do you have to, people in the BPO sector, why do you have to transport thousands of workers to a building just to answer the phone and say, hello, how may I help you today? How can I help you open your account? That was the business model that we had up to last year, up to March of this year. Now, BPO companies are thinking, well, do we need to have them come into this building? Why are we investing in this building? They can stay where they are, log in, and provide the same service and be compensated digitally through the bank that we're doing business with. So it's not I don't have a straightforward answer, unfortunately. But I think we have to use this crisis as an opportunity to rethink why we're doing what we're doing and if it's still fit for purpose.
Right. I think that will suffice for the closing words from you, Jide, unless you have anything further to add. All right, Antoinette, any closing words from you?
Sorry. I endorse what Dr. Lewis and Mr. Smalling have said in relation to the direction that they see things in. I believe that this crisis is forcing us to accelerate the trajectory that we were going to end up taking anyway, and that is the technology trajectory. Because as Jide said, you have to question, why do you have to sit 3 hours in traffic to go to a job that you can actually do online, as we're basically doing it now? And why do children have to go 20 miles somewhere when they could actually do it at home? So those things were always there coming forward, but I think this pandemic is accelerating it, as it is going to accelerate financial technology in Jamaica, as it has already around in some countries in the world. Some of the Nordic countries, 95% of transactions are done electronically, So it was a matter of time before we get there, but I think this crisis is going to accelerate it. And so, and in particular, because of the level of young in the world, they're going to demand it. And the crisis is going to force us to have it. So I think regulators, financial system safety net authorities also will have to rethink and to keep abreast of the new technologies to ensure that we can protect the system where value is where value is created, where how it is transferred from one party to another and distributed throughout the economy. So I believe this is what the pandemic has done. You know, the out of the bad, never to gainsay the amount of people that have suffered, you know, physically, but there will be a lot of good as well.
All right, Jerome, thanks for that, Antoinette. Thanks so much for joining us this afternoon. The final words, Jerome?
Well, I think Jide indicated, so all the things that we were used to would have created business opportunities. For example, the law indicated that based on the preferred treatment of equipment used in BPOs, it had to reside in a particular building. So that became a big business. People acquired buildings and rented them to BPOs. The law has been amended, so people are allowed to work and to keep the equipment at home. What will happen to the business people who would have invested in these buildings? Many of our expats have decided against traveling and they're working remotely. Big rental market in US dollars so many individuals would have invested in additional or investment properties and they were renting to expats. That market has gone. Many Jamaicans would have invested in the Airbnb market as well. So what will the future look like? People who are considered prudent, who would have made good, sound investment decisions pre-COVID are now carrying assets that may not necessarily be as lucrative as they were prior to. And those are some of the things that we are going to have to face as bankers in terms of understanding what are those new decisions that our clients will be making and how can we support those clients who would have made certain decisions based on how business was structured prior to COVID.
All right. Thank you for that, Jerome. Thank you all for being part of this conversation this afternoon. I think it was very, very enlightening, and we have a much keener sense of where we sit in Jamaica, in the Caribbean, what we've done to try to manage the crisis and what we need to do and what we are doing going forward as far as trying to stay our way through very, very uncertain waters. I think you guys are doing a great job, and I thank you all for being with us this afternoon and for sharing your perspectives and being part of our financial inclusion and financial literacy drive at the Caribbean Association of Banks. Thank you very much.